Bless you all for tuning in again. Let me look at I'm trying to analyze the markets, how the week will be, of course, and the week of second week of March, actually. And yeah, trying to share my insights here and there, how I think the market will be actually, some of the trades that I'll be looking forward for during the coming week. And at the moment, I'm in one trade, of course, it's EURJPY, and yeah, we're just waiting to see what will happen. If it goes to a take profit, it is what it is. If it doesn't go to a take profit, we wait and see. So let me check some of the trades that I'll be looking for the week, some of the setups rather that I'll be looking to take during the week. Now this is EURJPY, the first trade. Actually, let me show you my watch list at the moment. Now I've went through all the 30 pairs, actually all the 30 currency pairs. This is 30 or 25, somewhere there. I went all through them, and I've actually come up with at least the 5 that I'm trying to see where there will be at least some possible setup out of the 25. At least per week I focus on only 5 of them, those that have what you call a high probability setup type, right? Those that have imbalance, that have a liquidity sweep, the ones that have what you call a break of structure, and they have at least a range, and that imbalance lies at the 71% or 79% of my Fibonacci level. So let me show you. So this is EURJPY. This trade up, I already made a short about it, what actually it was happening, and this is what is happening at the moment. I've made a short about it, I've explained it, and we wait and see what will happen. It's not that it's going to play out. Whatever happens, it is what it is. So yeah, this is what we call, I had a so-called liquidity sweep, which no, is not a perfect one. Then I have what we call market structure shift, the first market structure shift. Then we have what we call a break of structure. We have a what we call an imbalance. Just waited for price to come to the 71% level zone. You can see it didn't reach the 79, but I was involved at the 71% level, which I'm currently in at. So yeah, so this is how it's going. It's currently retracing back to our entry, but at the end of the day, bro, we have to wait. Regardless of what is happening, I have to sit down and wait for this trade, whether to hit stop loss or whether to hit take profit. Remember, I don't have what you call a break even at the moment, because I'm still testing out things here and there. It's a new strategy. I'm currently this is my second week actually holding this trade. It will be my third week, no, actually my first week, because I started it on a Friday the week before that, so it's almost a week. It's a week actually. Then this will be my second week holding. Now the only problem with this strategy is that you have to be more patient enough to wait for this setup to play out, wait for the setup to come to your place, to wait for setup to either hit your stop loss or your take profit. Now the good part is that you don't need too many setups on this one. You only need 1 or 2, 3 setups per month, to maybe pass your funded account, to make some good amount of money. And with this type of approach, I can't afford to risk 1%, because it will take time. So instead, I'm risking on my funded accounts, especially in the challenge phases right now. I'm actually focused on risking 2% per trade. That means that I can be able at least to hold a trade for 2 to 3 weeks and still nothing happens. Now, what is the risk to reward of this trade? When I enter at the 71% level, the risk to reward ratio is actually what we call 2.45. That's the minimum actually. The maximum is 2.45 when I enter from the 71% level. Now my stop loss is at the 100% level, and my take profit is at the 0% level of the Fibonacci level. Now when I shift that entry point to my 79%, you can see the risk reward ratio now changes to 3.82. Actually, they're almost 4 there, but at the moment I'm comfortable with a risk reward of 2.45. So meaning if I'm risking 2% on my funded account, I'm anticipating to get at least 4.9 or something. When you remove the commissions, at least something like 4% when a trade hits my take profit. When it hits a sell, it is what it is. I only lose 2%, nothing magical there. So that's EURJPY. I'm currently involved in that trade. I'm also monitoring what we call GBPCAD. It's a very simple strategy. There is no rocket science here. You can see here this triple S, meaning this was a liquidity sweep, right? Price failed to close above, or close above this high here, hence it formed we called a liquidity sweep. There was a lot of orders that are resting above here, actually slightly here, so price came in, took them out, and it is what it is. It happened, and we had what we call a break of structure, and I have a good imbalance here. You can see right here, this GBP card have a very nice imbalance here. So at the 71% and 79%, you can see that falls actually on that imbalance very well. Then I'm just waiting. It's now a matter of patience to wait and see what will the market be doing in the course of new week. That's GBP card. Actually, it's very simple: break of structure, liquidity sweep, imbalance, fib level at 71%. Yeah, we wait and see. It's set and forget. Then I have EURGBP. This one also, you can see a price was going up, going up, going up. Definitely it broke this low here, and then that was formed what we call a break of structure. I have this as a break of structure, and then this one, regardless of how it looks, it comes what we call my liquidity sweep, and then I have a nice imbalance here. So definitely I'm waiting for price actually to pull back to this zone here, and then before we say that maybe to see what will happen. Actually, I'm expecting price to pull back, maybe like this, like this, like this, like this, to this level here, deep to this level, because I have a very nice imbalance here before again we see probably a shift to the downside. That's what actually I'm anticipating on Euro GBP. Then I have what we call GBPCHF. It's currently playing out actually, but I didn't get involved in this trade actually, and yeah, for some good reasons here and there I didn't get involved in, because I didn't like these candles, how it came up to that point. But at the end of the day, you can see the strategy works. I had what we call a liquidity sweep here, that this break of structure right there had a very nice imbalance. Actually, you can see price came to the 79% level zone, and yeah, at the moment I'm waiting for price to see probably can see high has our lows right there at to our take profit at the moment. That's what I'm actually looking at on GBP Swiss franc. And then I have what we call Audi Swiss franc. Is simply I'd say that I'm actually observing also here. It's actually at my 71% level again, and then reason being is that I have a good what you call a break of structure to the upside. You can see this was a very good impulsive move to the upside, and then I have what you call a liquidity sweep here, and then actually the imbalance falls here, but I'm not sure about there must be something like a gap somewhere here. That's why I've marked it. That's why I've put this trade into consideration. So I'm actually probably waiting for price probably to come a little bit lower before we can start pushing to the upward. So basically that's what is happening at the moment. That's what I'm looking at. Yeah, those are the 5 pairs that I'm actually monitoring. You can see right here, these are the only 5 pairs that I'm monitoring for this week, that it's coming. It's a very simple strategy, and it needs patience. I've been implementing, I've tested this, and you have what you call a 40 to 60% winning rate, depending on the kind of depending on the risk reward ratio that you're using. If it's a 1 to 3, the more risk reward ratio you have, the less winning rate you're likely to have. See you next time. Hope you have enjoyed this video. Remember to like and subscribe. Peace out.